The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 1st. How about that, folks? August 1st, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, you can give us a call at 727-445-1044. If you can't make the call, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question. And then, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 88 points. He's trading out at 21,979. S&P is up about 6, trading at 2476. NASDAQ 100 up 10 points. She's trading at 5890. Russell 2000 is flat. The semis are up 4 points. New York Stock Exchange up 32 points out there. New advanced decline line high again today. Transports are down. Not unusual. They've been down here for quite a few, several days. The VIX index is off 20 cents, trading out 10.06. Gold is up $5. Silver is back 2 pennies. Light sweet crude is giving you a Gartley sell confirmation today. It has done that. It's back $1.24. So we'll take a look at price targets there. Leading the charge here to the upside, you've got Credit Acceptance Corp. That's up $24 or 10%. Cognex Corp up 15% or $14. IPG Photonics up $12. Insperity up 12. Amazon up 11. Shopify up $10. Lumber Liquidators up 8. To the downside, it is Regeneron Pharmaceuticals off $19. Martin Marietta off 13. Cummins down 12. IDEX Labs off 9. Puma Biotech off $8. Priceline down 7. So plenty to look at. Of course, I want to look at what you want to look at. Having no request at this stage of the game, let's go take a look at strength out there, or what looks like strength. We take a look at the markets. Let's do it by taking a look at the equity futures contracts. So let's go take a look at it. Let's try to identify, see if we can find any chinks in the so-called armor. Now, if we take a look at the Dow equity futures contracts, there was a chink. There were several chinks as over the last couple of days, but those chinks are long gone. That chink, of course, being the price relative strength divergent pattern. We don't have that any longer today. It's got plenty of strength. Its relative strength index is higher than where that anchor point started. So that says, well, now we've got an A to B equals CD pattern that is underway. That gives us a price projection of about 22,206. We are trading at 21,922. So that's another 280 plus points to the upside. By the way, speaking of the Dow out here, today is the first day for TFNN's Facebook extravaganza. Now, I'm not a Facebooker, so I can't help you on the Facebook side. Maybe I can help assist you with regard to where is the Dow going to close. Now, for those of you that are Facebook lovers out there, you should come over to the homepage at TFNN.com, go to the Facebook page, I should say, of TFNN, and go ahead and put in your guess as to where the Dow is going to close today at 4 o'clock. But if we do look at, and with regard to today, perhaps the shorter term time frame charts will give you a better feel as to where they're headed. So we'll take a look at that. We'll try to do that each day for you until I'm told that I can't, at least with regard to what the markets are communicating to us at 1:11 in the afternoon, which could be totally different than what the markets will tell us. I think it's 3 or 3:30 when you have to have that selection, that price point in. But as the daily chart here shows right now, we don't have any real reversal signals. And this suggests that the Dow will continue higher for at least another couple hundred points. We can easily make the case that it's more than a 1-to-1 A to B equals CD to the upside, 22,496 of the 1.272. And support ought to be 21,768. So that's what the daily chart is communicating to you and I. But let's go take a look at that 5-hour energy drink chart. That's brought to us by Saratoga Bob, who's not in the den these days out there. But nonetheless, what we have seen on the 5-hour chart was we saw a price move back to test a level of support. Now, this is the confusing chart out here. And that is that we are in now what looks like a confirmed 7th wave move. That is the chart singing to you in that 5-hour chart in the key of G. So you'll see a G label on my screen if you're watching us on TigerTV. And when you get to that 7th wave move, that's where you can begin to see a decent, in this case here, be a decent decline. Now, in order for that to occur, one thing has to take place. And that is you need to see price close below Stevie's red line number. I gave you the red line number on the daily chart. On the 5-hour chart, it's 21,895. Now, that number is going to change a bit as price moves up and down, but just figure in that range. If you were to see it close below that price point, doesn't have to be today by 4 o'clock. It can be tonight at 7 o'clock or 8 o'clock or 9 o'clock or in the morning at 2 o'clock. You'd want to be watching that line to then confirm that, okay, price could pull back to about the 21,697 area. That's what I would be looking for if, in fact, you got that doble Guy confirmation. We don't have that. All we have right now is prices come back, tested support, and it has bounced off that level, the 21,895. No, that is not the low of the day, but that is Stevie's red line. So that's what the 5-hour chart. Again, we're looking at strength out here. So that says, okay, maybe there is a short-term top in place, but that short-term top certainly went down and tested support. If we look at the 2-hour chart out here, this is just simply brought to us by TFNN. If we take a look at price was moving higher, doing it with less relative energy out there, and you got that little bearish engulfing bear sash candle at about 8 o'clock this morning. And then you did see follow through. You saw follow through on that very next session with price moving lower. Never got down to what we would call a level of support. That would be the top of its 120-minute profile, 21,869. That doesn't mean that we don't have a small A to B equals CD to the downside that could be unfolding. So those of you that might want to take the bearish outlook, and I don't know that this would happen over the course of the next couple of hours, but I can give you a price target if, in fact, this is to be an A to B equals CD to the downside. And you can just subtract this number. Take 21,936, subtract 21,860. What does that give you? That's about 40. That's about 76 points to the downside. Just take 76 points from where the Dow is trading at right now. That could be one of your price targets inside the Facebook giveaway. Check us out at TFNN. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back up, folks. Dow's up 86 points. The S&P is up about 6 right now. And I got a weird pop-up on my screen. A Trojan. That's a bummer. Calling Microsoft support. It's probably not Microsoft support. See if I can try to work around this for the rest of the show, and then I'll go back to it. So looks like I probably can. It wouldn't let me close that sucker. Bummer. Let's take a look at the 30-minute chart. Let's just go ahead and finish this off here. The 30-minute chart for the Dow Equity Futures contract. And what is this really showing to us? Not a heck of a lot. You've got support at the early morning low today. You've got resistance at last evening's high at about, or the high at about 5 o'clock this morning, the low really at about 10 o'clock this morning. So it's not really providing you and I with a whole bunch of information out here. So that's with regard to what with regard to what the strength is showing. This is a real bummer, man. How do I get rid of this? Really popped up at a bad time. Let me see if I can figure out. It says processes. I don't see this thing up here. Well, let's see. See if I can find Internet Explorer here. My apologies, folks, but let's see if I can do this, if I can end the task here. Will it do it? Oh, it's gone. Oh, it's a beautiful thing because it was just simply blocking everything. It was blocking and tackling. Now, let's go take a look at probably the biggest piece of the biggest element that we want to take a look at is Apple. Are there any clues? Because Apple's out with numbers today at about 4:30. And so right now it's trading out at 149.07. It's up 34 cents, about 0.25% out here. And the question is, is Apple providing you and I, let me just pull this back. There we go. So we have a bigger chart to look, providing us with any information, as to what it wants to do. Our shareholders, is there anything that's giving us a clue? So with regard to Apple, out here. What we know is that price pushed lower a couple of days ago with decent volume, 32 million shares out here. And what price found support at was the bottom of its daily box, 147.59. So we know that is a good support area. In fact, just below that is the top of a weekly box, 146.70. So you've got 146.70 and 147.59 that thus far have acted as a support area. If the shareholders today respond poorly to whatever it is that Apple churns out, then you would be looking to see if those areas would hold as support. If price were to close below 146.70, trade below 146.70, you could easily see a move down to the 141.72 area. That would become the bottom of its weekly box. It would also be, in essence, close to a test of that little downdraft day from June the 12th. There were 72 million shares down there. And the question would be, is it going to test that area on lighter volume? So that's the downside potential here. Yes, support is held, but what you would be looking for, because if you get back inside that weekly box out there, that is still a bearish structured box, meaning the center is closer to the top than it is to the bottom. And once you would get inside 146.70, there's no reason for price not to go back and re-explore the bottom, which is 141.72 out there. And then what that really would likely set up is some type of sideways consolidation out here, because we can see that this high that was generated back on May the 15th, where there was 26 million shares, that was in essence tested, not the top, but the actual swing point was tested with 21 million shares. So you already have a rejection of a swing point up at the high. That would then lead to wanting to see perhaps another test of the swing point down at the low. So that really becomes the let me do this here for you. For those of you that are watching us on Tiger TV, let's get rid of the profiles. And this would say that Apple would be inside this little box range. Now, that would also, in essence, if price were to break above, that means close above 156.65, the high from May 15th, then we would look at a price projection to the upside inside of Apple equal to this little consolidation box. So if we just go measure that again, that'll be the easier way for me to do it. And we just take that little rectangle out here, and we put it up on the top. That would give you a measured move up into the 169. Now, I'm not saying all of this happens in one day. It could happen in one day, but those would be your price areas to the upside, as well as we've already identified them to the downside. Unfortunately, there isn't anything that I'm looking at here that seems to be a tell, so to speak. So it's not really showing us what it really wants to do. All that we know are areas of support and resistance. So this would then assist individuals that are holders of the stock, depending on when you got into it. If it's from a short term, because we did have a request that might have been, I don't think it was yesterday. I think it was last Thursday when I was with you. Someone that was in the equity at 150, I think maybe about 100 shares or something like that. And at that stage, all we knew also were these levels of support. So we haven't, and resistance. So we haven't gotten any signal here. And right now the stock's trading at 149.03. So it's good to know your downside potential as well as your upside potential. And upside, you'd have to say at this stage is the top of the consolidation, the 156 level. Even if I put this on since we did finish the month, let's go take a look at the month out here. And let me do this. Let me do this out here. So from a monthly perspective, a couple months ago, you did have that little bearish engulfing candle. That's the month of June, by the way. And so that tells us that resistance on a monthly perspective is going to be the highest high of the candles where it had engulfed, either that individual candle that was the bearish engulfing or the previous candles that had engulfed. In this case here, 156.65. So you just have another signal. And in fact, we have a monthly. How about that? We switched over to a monthly box, and 156.65 is a brand new monthly TAS market profile. Now, you don't often see me show the, well, let me just make sure. Yeah, that's it. That's the price. So this shows real resistance at 156.65. Now, the interesting thing here with regard to support on Apple on a monthly basis is the bottom of that new monthly box out there, 132.45. So these are the parameters. Which way is Apple going to go? Quite frankly, I don't know. I don't know. Price is trading inside of the weekly profile. That is or the monthly profile, or the monthly swing point, I should say, really, of May 1st out here. The monthly profile. Let me do this. Let's turn off the weekly one. So here's the monthly profile, and you have to say that this is a slightly bullish profile. The center of the box here is priced at 142.13. The bottom is 132.45. Somebody out there can do the math, and the top is 156.65. Visually, looks like that center is a little bit closer to the bottom than it is to the top. I'm going to actually, even though it is, I think we just simply call this neutral. More neutral than it is. Really, if it were much closer to the bottom of the box, then we would say, hey, there's a level identified as strong support based on the TAS market profile. So right now, even this is neutral, and my call at this stage has to be neutral as well. I don't know which way this is going to go, at least with regard to the tools that we've just looked at out here. Okay, so enough about that stock. Let's go take a look at Goldilocks. Gold is up $5.70, and that might not seem like a lot to you. You know, I was on doing the segment with Tom yesterday, and then boom, the internet was gone. Didn't come back until 7:30 last night. That was a bummer. But let's go take a look at one of the charts, little subtle thing that suggests gold is breaking out. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So during that break, I got an email here. It was from James. So it was James was the one that sent an email last week, I think on Thursday, with regard to Apple. So the only question I didn't answer for him was, he said, long term, when the iPhone 8 comes out, what are the targets? So the only other tool that I can provide to you is as follows. We're taking a look at horizontal trading ranges, and these are the weekly levels. These are the green levels. The center line, the little dash line, is the center, which sometimes can act as a support or resistance level. It's really the solid lines that you would be looking at. So what you need to see here, James, to the upside, is you'd be looking for Apple to be able to bust through the 158.75 area. And then if it can do that, then what you're looking for a little bit longer term is move to 181.20. Is that where it would cap out at? No, not necessarily. If we take a look at this weekly chart here, let me go ahead and insert my A to B equals CD tool. No, I don't want to do that. I want to insert a study, not a symbol. It's not on this chart here, so just give me a moment to do that. There we go. And we'll give you a price projection here with regard to the lightning bolt pattern inside. That is present inside of Apple. And you know what? That takes us, quite frankly, the one-to-one takes us to 169. So that 181 is a pretty good target. You could make the case at 190. So I would have to say that long-term, regardless of what Apple introduces, would be targeting the 190 level. 136.30 would be an area of support. That is the bottom of this little weekly horizontal trading range that it is trading with. And really, what it helps us do here, James, it really helps us to identify this little consolidation zone that Apple is trading in. So thanks for writing in, and best of luck on this trade, whatever it is that you decide to do with it. I'm in your corner. I'm pulling for you. We also had a question out here from Phil. He wants to take a look at IGT. And Phil, I apologize. I see you sent me a chart, and on my phone, my iPhone here, it's just making the text really small. So it's actually hard to really read what it is. But it looks like you got in at a gap this morning at around $21, and you're just simply asking my opinion as to where this might head to. So let's go take a look at International Game Technology out here. Must have been out with earnings. Nice move today. We are seeing a change in polarity, and what we mean by that is if we take a look at the gap that is open here, we'll just use the actual gap. That was where price had been as low as on May 24th, 2060. Gaps down the very next day with some good volume behind it, 6.1 million shares. Today you're up with 3.6 million shares. That little window, that little gap to the downside should have acted as resistance. It hasn't. Right now, then, what I would be looking for, I know you're in at 2137. You don't want to really see this close below 2060. You want to see that continue to act as a level of support. Now, along the way to the upside, this has got a bunch of resistance for you. I don't know what took place on the trading session of March the 9th, but we do know there were a lot of shareholders that fleed. That also meant there were a lot of shareholders that were buying up at those levels. That ran the price gamut of 27.49 down to 23.44, and we know the equity made a low of 19.79. So when you go from 28, in essence, down to 19, you figure out that percentage. It's a pretty significant one. That means there are a bunch of shareholders along the way, on the way down here, that were just saying to themselves, my goodness, if you would just come back to break even, I'm going to go ahead and take my money off of the table, because they were believers that all of a sudden became non-believers. So to the upside here, expect to find some turbulence. Just put on your seatbelt. Doesn't mean you have to exit. Just means that you could or should see some folks that are going to be trying to get their cash back. Now that range is fairly large, 27.49 into that 23 level out there. But that's what we're taking a look at right now. Now what we do have here is certainly a completed A to B equals CD to the downside. Let's take a look at this on a little longer term time frame. That way we'll have more data out here. And so you can see the A to B equals CD pattern, which really set up a Gartley buy, right? So here's your A to B. Your A point was out here, big old weekly bearish engulfing candle. Makes a low out here the week of December 12th, retraces into a high on January 30th, and then voila, we have our 1 to, in essence, 1 to 1.272 A to B equals CD to the downside. So when you make a Gartley pattern, as this has, what we know is we also have 5 different potential outcomes. So when we take a look at the IGT, I'm going to turn these boxes off. And in fact, we don't even need I'll leave the gaps just for the moment. And we're just going to look at retracement levels, because that's going to give you the first 4 potential levels as to where this would bounce to. So interestingly enough, the dead cat bounce in IGT takes you, in essence, right up to that 2305 area, that little gap. I'm going to get rid of it now because I can't really see it, but 2291 is a 0.382 level. So we know there's a resistance zone there. And if you were to see price turn back down, this could turn into another A to B equals CD to the downside. So that's always a potential possibility, because at the 2291 level, you will obtain outcome number 1. 2641, that'd be your 0.618 retracement. That'd be outcome number 2. 2890, outcome number 3. The 100% move takes you all the way back up to the highs. Do we see that in there as we speak right now? We have a Gartley buy, and you just simply have to take this, one step at a time. If we go take a look, and that's on the weekly chart that we were looking at. I'm going to put my other tool up on the screen. Let's see if it populates here pretty quickly. Oh, that's a pretty ugly population out there. So let's do this here. What do we want to do? Reload all historical data. Let's see what now filters into the system. Now, this doesn't show today's. There we go. Now we got today's gap to the upside. It also gives you, it's interesting to me, you see this green dashed line out here? That's also a resistance zone, 2179-ish. So you'd like to see it close above that as well. And on this chart, it says you don't want to see it close below 1941. So, Phil, best of luck. Now, the one nice thing that you have here today is you do now have a rising price oscillator above zero. In the case of IGT, we have not seen this trade above its price oscillator since March of this year. So that's where you start to get into bullish. So if there is a bullish outcome, that's it today. Pay attention to those Gartley buy levels, 2291, 2641, and don't forget that little resistance zone, I think right around that 0.382 retracement. Okay, I see another question up here. Says, SR, your thoughts, please. Am I crazy? No, of course you can't be crazy. Or does it make sense that I foresee the euro and the yen continuing to stair-step the rally? So if we take a look at the euro specifically, no, you're not crazy at all there. This has a measured move now that takes you up into 128.05. So who's the crazy one here? Is it me or is it you? Most people would probably say you're crazy to suggest that the euro could move all the way from when it was pretty much near par, got down to 103, and make a move all the way up to $1.28. Hey, if you're planning your trips to Europe, you might want to go ahead and lock those in as we speak right now, because there is a nice consolidation that has been broken. And until price closes back into that consolidation, we'll make it easy to do that. Gets below 117, 128 is the target. Steve Rhodes with TFNN. We'll be right back.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's do our thing and finish out the question here, because the question was about the yen as well as the euro. So we've really covered the euro. And that was a weekly chart, by the way, that we were looking at. So it's giving you the little bit longer term picture out there. Inside the Japanese yen right now, we're just looking at a daily chart. And here's what we know about the Japanese yen. Now, we're going to go look at the futures contract because that was really the question out here. But in taking a look at the cross pair, where I've got a 15-minute delay, we can see the price has made a 0.786 retracement of its last move. I'm referring to from the June 14th low to that key reversal high out here on July 11th. It was that key reversal high because of the currency pair that took subscribers to my newsletter service, Mastering Probability, long into both gold as well as the miners. Now, gold has been outperforming the miners at this stage here, and that's where the uncertainty was from my standpoint. I know that the correlation, the direct correlation between the yen and gold, that we had confidence there, but it's nice to have exposure in both areas out here. Now what we know is that the yen is trading with inside the swing point from June 14th. And as long as the currency pair trades below 110.34, that sets up a 100% move of a move and means that it should test the low about 108.83, which would also then come back here and test the bottom of what could be a consolidation area. Well, not the bottom, the bottom of the consolidation, but the top of the April 17th candle, which would be the 109.08 area. So it looks as if that is what the yen is trying to do. So if you go take a look at the yen futures, that means the futures contract here should be moving higher. Now, what the futures contract, what this chart shows us, which is nice, is that it was either today or yesterday. Looks like it was yesterday, was when that bottom panel, that price oscillator, got right to the zero level out there. Now, when that occurs, what you typically see is you typically start to see a sideways move in price. If you take a look at where we're at right now in the yen, you're going to see kind of a high wave-ish type candle and a sideways-ish type move. Similar candle to what we looked at on the currency pair out here. So what that really sets up is perhaps a little bit of pause in price action, as well as the red line in the price area of the chart eventually catching up to both of them. That'll move higher. Price may pull back a bit, and then a test of what we call Stevie's red line. Now, A test of that area and then a bounce higher, that would then communicate to us that the yen futures would continue to move higher. Now, we know that resistance is right up here, right after this bear sash candle. So resistance is about the 92.27 type level. Right now, you're at 90.93. Now, that should bode well for gold. That should bode well for the T-bond futures. And if you take a look at T-bond futures as we speak right now, 145, they've actually given us the bullish signal, because you can see they are trading above Stevie's red line. And that says, and we're trading right into resistance. So what my call here would be more neutral than anything, because we're just hoovering right around the flat line, the zero line here. And but this is a more bullish than a bearish message. And we do have two bullish candles over the course of the last 3 trading sessions out here. So bonds establishing themselves as wanting to put in a low. And the price target, quite frankly, becomes this little previous swing point from just a 2, 4, 6, 7 trading sessions ago out there. So there's no sideways movement here, but there certainly is in the currency pair. Now, I had mentioned gold earlier, so let's go take a look at the gold chart. And then I think there was another question about the DAX, so we'll go take a look at that. But with regard to Goldilocks, what we're going to do here, we don't do it too often, but in this case we're going to go take a look at this chart. This is the continuous contract for gold. And what you and I can see right now, as we speak, this very moment, this is a daily chart. I'm going to switch this to a weekly chart out here, because I believe it is the weekly chart that is more important. Now, what we're taking a look at out here is we're taking a look at a descending trend line that begins all the way at that price level of $1,923, $1,923.70 to be exact. And in essence, your next touch point is out here. That was, by the way, that was from the time period, the week that began September 12th. The very next touch point was the week that began October 1st. By the way, 2012 is the latter, and 2011 was the September date out here. And what we can see is we can see that this trend line thus far, it's only Tuesday, has been busted. It has been busted. And if price is able to close above this level, if price is more specifically able to close above, let's call it the previous swing point, that's the high from the week that began June 5th. That is a level of 1298.80 or 1279.40. So watch that. Then what we should see is price to continue to move to the upside. Now, the question will be, is this an A to B equals CD pattern that is setting up? And there's several of them in here. The one that would really be activated, I would say, would be this one. Your A point down here on December the 12th, 2016. Again, a weekly chart we're looking at. Your B point out here on June the 5th, 2017. Your C point on July the 10th. And that gives you a 1-to-1 price projection of 1378.50. 1425.96 would become the 1 to 1.272. And based on this movement thus far here along the C to D leg, based on the fact that it was only a 50% retracement, more likely than not, it would be the 1425 level that would come into play. And Z, you've got a price target of 1450. So that 1450 would get you up towards that 1 to 1.618 A to B equals CD. But it does look like, folks, what we have here is a potential for an important break-in trend inside of Goldilocks. Now, what that ought to do, if in fact, now, what happens if we close back below this descending trend line come Friday? Well, what we have is a clear signal that that is a very stiff line of resistance, and price could go back and pull back to the most recent lows of the 1204 level. We'd have to take a look at what's going on inside market profiles and so forth. But at this stage here, as we speak right now, 1:49 in the afternoon, based on what we took a look at in yen futures, based on what we are taking a look at right here on the weekly chart for gold, it all looks really, really good. Of course, looking good would be helpful if we took a look at the synthetic contract for gold out here, and that would give us a 62.40 daily and weekly profile levels. You got green shoots pretty much everywhere except for the weekly. The weekly says 1293 becomes the next target. So we'll say that that larger outlook, that larger A to B equals CD pattern would occur if in fact you can see it close above 1293.60. Now, it doesn't have to happen this week, but anytime you would see it close above 1293.60, this pattern, this A to B equals CD that we looked at, is in play. And that, my friends, is Goldilocks. All right, so the Dow's up 85, the S&P is up 6. We have to figure out what it is that we want to take a look at. We come back from this break in about 15 seconds or so. So do yourself a favor. For all of you Facebookers, please come on over to the Facebook page for TFNN. I think I'm saying that right. I have never used Facebook a moment in my life. I know I'm behind the scenes out there, but that's just the deal. But many of you are not behind. You're not a dinosaur like I am. So go with your Facebook thing, go over to the TFNN site, and guess where you believe the Dow is going to end the day. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So I don't see any questions for the last segment here, the last 4 minutes. So I don't know. Let's go take a look at since we had talked about gold and the potential breakout. The breakout. It's a breakout for sure. The question is going to be, where does gold end up on Friday? To me, that'll be the confirming point of a potential breakout here. So what's the mining sector doing? Instead of looking at the GDX, at least looking at it first. Let's go take a look at Barrick Gold, because that is up 3% as we speak today. So Skeena exercises option to acquire SNP. SNP! I don't know what SNP is, but we're going to go take a look at Barrick Gold, ABX. So it's having, and the reason we are is because this has such a weighting, a large weighting, or it's the largest weighting is what I should say, inside of the gold miner ETF out here. So as we take a look at it, what we want to do, it being ABX, Barrick Gold, let's go ahead and put our daily profiles out here. And we know where the resistance zone, right? Because there was this gap to the downside. So we don't know whether it's going to be the top or the bottom of the gap, meaning is it going to be 1882? Is it going to be 1821? But that should be your resistance zone. Now, what Barrick Gold is doing today, let's go take a look and put the volume out here. It's taking on a previous swing point. That takes you to May 17th. There was only 21 million shares there. You've done 11 million shares. So I say only. Well, guess what? It's moving above the top of that swing point with lightish type volume. So looks to me, folks, like Barrick Gold, ABX is headed for the 1821, 1882 level. No idea whether we'll take that out or not. If I look for a weekly box out here, let's go see where those numbers come in at. And the weekly says, well, Steve-O, if you really think 1821 is possible, guess what? You've got to get over 1766. So watch for that 1766 level. If you clear that, 1882 is most likely the place where Barrick Gold would trade to. That should assist with taking the GDX to higher price out here. The GDX, its next resistance area is really that swing point from June 6th. 97 million shares were traded out there. You've done 15 million today, so it's not like there's a lot of vigor behind the move out here. Nonetheless, it's just gradually moving higher. But real positive here for the mining sector. One, the breakout in Goldilocks. Well, two, the yen is confirming that. Three, Barrick Gold has turned off of the bottom, and you've got a nice move today. So hopefully that assists each of you as well. So what do we want to look at here during the next minute? Any requests out there? I don't see anything. I don't really know where to go. Great Panther. Great Panther is looking groovy, says Mike in the den. So let's go take a look at GPL. Eventually, Mike, that thing's headed to 3 or 4 something out there. It's all-time highs. That's a pattern that's been present for, I don't know, several years. But it could take several more years before that happens. But in the case of Great Panther Gold, it is above the resistance zones of both its daily and its weekly profile out there. And that was in the 130 level. You're at 134 as you speak right now. Now, volume today, about 1.2 million shares going into 1.8. Yeah, about 1.8, so it's going to be a close call out here. So you could see a bit of resistance in the 138 level, another 4 pennies to the upside. But, hey, let's face it, if you can break through that, or when you do, you probably have a move of about 30 cents, 20 cents at least, 20 cents to the upside. That would take you into the 160-ish type range out there. So, folks, get over, if you're a Facebooker, get over to TFNN's Facebook. I hope I'm saying that right. I think I am. And sign up for where you think the Dow is going to end the day. I'm going to go with 22,007. We'll see if that's right. Stay tuned. Your favorite polar bear mine. David White's up next. Tom O'Brien 3 to 5. Andy Heck from 5 to 6. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.